Hey, tech enthusiasts, buckle up for your Friday dose of the Tech Stocks Daily podcast, where we dive into the heartbeat of the market. Today, Apple found itself at the heart of two pivotal discussions reshaping its presence in the tech realm, spotlighting the company's relentless push for innovation amid mounting legal challenges. To start with, Apple's strategic maneuvers to strengthen its foothold in China's AI landscape have caught the industry's eye. The company reportedly engaged in preliminary talks with Baidu, China's answer to Google, to harness its artificial intelligence expertise for Apple devices in the Chinese market. This reflects Apple's acute awareness of China's distinctive regulatory requirements, which mandate AI models be vetted by its cyberspace regulator. This news nudged Baidu's stock up slightly, illustrating the market's optimistic reception of this potential collaboration. Amidst evolving AI paradigms, Apple also seems to be navigating through its options, flirting with the idea of leveraging Google's AI prowess, particularly its Gemini AI model, and OpenAI's groundbreaking ChatGPT for iPhone enhancements. This strategic exploration underscores Apple's intent to stay abreast with AI advancements, acknowledging AI's capacity to redefine user experience. However, Apple's ambitious technological pursuits are presently overshadowed by a significant legal battle. The U.S. Justice Department, supported by 17 states and districts, lodged a lawsuit against Apple, accusing it of monopolizing the smartphone market and stifling competition through restrictive practices. The allegations highlight various strategies purportedly employed by Apple to maintain its dominance, from limiting the functionality of competing smartwatches and payment solutions to impeding the integration of innovative apps within its ecosystem. This lawsuit seeks to dismantle barriers Apple allegedly erected around its ecosystem, demanding the Cupertino giant to open its doors wider to competition. It marks a crescendo in the regulatory scrutiny over big tech's monopolistic tendencies, challenging Apple's operational ethos that has substantially contributed to its market ascendancy. This juxtaposition of Apple's innovative ventures against the backdrop of regulatory challenges illuminates the multifaceted pressures the tech behemoth navigates. On one hand, its relentless quest for AI integration mirrors a future-forward vision, aiming to cement its status as a frontrunner in technology evolution. On the other, legal hurdles seem to be encroaching upon its legacy of dominance, hinting at a potentially transformative period ahead. Will Apple's strategic alliances in AI innovation and legal defenses fortify its market stronghold, or will these challenges catalyze a pivotal shift in its operational and competitive landscape? Only time will reveal the outcome of this intricate balancing act. Today in tech news, Google has made headlines for a couple of significant reasons, stirring the stock market and attracting attention from antitrust regulators in India. Our first glimpse comes from the Competition Commission of India's recent engagement with Google. The CCI has waived off interim relief to app developers, challenging Google's payment policies for its Play Store. This move comes shortly after a contrasting CCI order against Google, adding layers of complexity to the ongoing antitrust battle the tech giant is facing in the country. Despite app developers' grievances against what they perceive as Google's unfair billing system, the CCI found insufficient grounds to halt Google's practice of charging fees for Play Store listings. This decision is grounded in a philosophy of monetary compensation for aggrieved parties rather than interim intervention, a stance shaped by directives from the Supreme Court aiming to reserve such relief for instances of undeniable, imminent harm. Moving to the stock market, Alphabet stocks are looking up, thanks in part to positive assessments from investment analysts. Wedbush, a leading investment firm, has notably enhanced its target price for Alphabet stocks, propelling them into its best ideas list. This optimistic stance is fueled by Alphabet's potential in artificial intelligence technology, coupled with its established dominance in digital advertising. Wedbush analysts argue that Alphabet benefits from an unrivaled volume of data for AI model training across its diverse platforms such as Google Search, YouTube, and Android. They refute the perception of Alphabet lagging in the AI race, suggesting instead that the tech titan is well-positioned to catch up with or surpass its competitors. Furthermore, the sustained leadership of Alphabet in digital advertising underpins its financial health, offering a sturdy fallback amidst the speculative nature of AI's monetization. With Google's shares valued attractively compared to the broader market, Wedbush's bullish outlook paints a bright future for Alphabet amidst the AI frenzy. Overall, the narrative surrounding Google today traverses regulatory scrutiny in India's digital marketplace and financial optimism rooted in the company's strategic positioning within the AI and digital advertising landscapes. Today, Microsoft seized headlines for a trio of compelling reasons, each showcasing its strategic moves within the tech industry. Firstly, the tech titan made waves with CEO Satya Nadella's candid remarks regarding OpenAI, illustrating the company's assertive stance on artificial intelligence autonomy. Nadella's November comments portrayed Microsoft as both intertwined yet self-sufficient in relation to OpenAI, emphasizing that, despite any external collaborations, Microsoft has maintained its innovative edge, possessing the necessary talent, computing power, and data to thrive independently. This revelation gained fresh relevance following Microsoft's appointment of Inflection AI co-founder Mustafa Suleyman to spearhead its AI initiatives, marking what's perceived as yet another tactical maneuver under Nadella's belt. The second piece of news that spotlighted Microsoft was the launch of its AI-powered Surface Pro 10 and Surface Laptop 6 business laptops. These devices showcase Microsoft's drive to integrate AI technology deeply into its hardware, offering features designed for the modern professional. Notably, these are touted as the first Surface devices optimized for AI, equipped with Intel Core Ultra processors, with the Pro 10 model being lauded for its 5G connectivity. Lastly, Microsoft's audacious move to onboard key figures and approximately 70 employees from Inflection AI left the tech world buzzing. Through a deal that has characteristics of an acqui-hire, yet devoid of a formal acquisition, Microsoft is set to pay around $650 million. This includes licensing Inflection's AI models and compensating for any waived legal rights concerning the mass hiring event. The move, although celebrated as potentially beneficial for all parties involved, has sparked a conversation about antitrust concerns amid big tech's expanding footprint in AI technology. As of now, Microsoft continues to solidify its position as a commanding force in the evolving world of technology, embracing AI's transformative potential while maintaining strategic independence and fostering significant industry partnerships. Its maneuvers not only shape the competitive landscape, but also hint at the broader shifts toward a more interconnected yet autonomously innovative tech ecosystem. Today, Synopsys made headlines due to a notable bearish sentiment observed among big money investors concerning its stock, as revealed through publicly available options history tracked by Benzinga. This elevated attention comes amid significant trading activity hinting that something substantial may be on the horizon for the company. The analysis shows that out of the options identified, there was a stark contrast in investment behaviors, with 75% indicating a bearish outlook and 25% favoring a bullish perspective. The trading consisted of one put option worth $90,220 and 11 call options totaling $531,196, suggesting that significant investors anticipate Synopsys' stock price to fluctuate between $500 and $800 over the next 3 months. Delving into Synopsys' core business, it's prominent as a leader in providing electronic design automation software, intellectual property, and software integrity products. These tools and services are essential for automating the chip design process, thus enhancing accuracy, productivity, and managing the progressively complex chip designs, fitting into an end-to-end solution. Synopsys stands at a crucial nexus as semiconductor companies increasingly take on system-like characteristics, and systems firms begin in-house chip design. This confluence is massively expanding EDA's customer base and benefiting from the ongoing digital transformation across numerous industries. Recent performance insights have also surfaced, revealing an optimistic stance from industry analysts over the past month with a proposed average target price of $643.75 for Synopsys stock. Options trading, with its inherent risks and rewards, continues to be a focal point for investors. The current sentiment and trading activities underscore the ever-dynamic nature of the market, with seasoned traders keeping a vigilant eye on market movements and emerging trends that may influence the future trajectory of Synopsys' stock. In today's scoop, Meta Platforms, the tech giant formerly known as Facebook, made headlines for a trio of intriguing reasons that have had everyone talking. Let's dive in, and don't forget to share your thoughts in the comments below. First off, Meta Platforms has captured the attention of growth investors for its promising financial outlook, earning a favorable growth score in the Zacks Growth Style Scores system and carrying a top Zacks rank. Its projected earnings per share growth of 34.1% this year overshadows the industry average, setting the stage for what could be a stellar financial year for Meta. The efficiency and sales growth metrics of the company also stand out, indicating robust operational prowess and a promising future that growth investors are likely to love. Then, there's the splash in the luxury world with Meta's CEO Mark Zuckerberg reportedly treating himself to a jaw-dropping $300 million super yacht named Launchpad. This 287-foot marvel, constructed by the renowned feedship yacht builders, has caught everyone's eye as it made its way into Fort Lauderdale, boasting capabilities such as cruising at speeds as fast as 24 knots. Not only does this purchase highlight Zuckerberg's immense wealth amassed through the success of Meta Platforms, but it also underscores the billionaire lifestyle that includes such extravagant acquisitions. Finally, Meta finds itself in the legal spotlight with a class action lawsuit over alleged misrepresentations concerning the audience size for ads on Facebook and Instagram. The U.S. Court of Appeals for the Ninth Circuit has allowed the lawsuit to proceed, with advertisers claiming that Meta inflated ad reach metrics. This legal battle marks a significant challenge for Meta, as it touches on the trust and transparency issues that are critical in the digital advertising space. These stories combined paint a picture of a company at the forefront of growth and innovation, while also navigating the complexities of legal challenges and the personal endeavors of its high-profile CEO. What's your take on Meta's diverse headlines today? From its investment appeal and Zuckerberg's latest luxury purchase to the legal hurdles it faces, let us know your thoughts in the comments below, and don't hesitate to dive into the discussion. The overall market sentiment today across the tech industry seems to be a mix of innovation-driven optimism and cautious skepticism due to emerging legal and regulatory challenges. The diverse updates from key players such as Apple, Google, Microsoft, Synopsys, and Meta Platforms paint a picture of an industry at the forefront of AI technology and digital transformation while navigating legal and competitive landscapes. Apple is immersed in advancing its footprint in AI, showcasing its intent to remain at the cutting edge by potentially collaborating with giants like Baidu and Google. However, it's also facing a considerable legal battle with the U.S. Justice Department over allegations of monopolistic practices. Google, meanwhile, stands resilient against antitrust challenges in India, showing strength from its position within the AI and digital advertising markets. Positive assessments from investment analysts, such as Wedbush, reflect financial optimism tied to Google's strategic AI initiatives and its dominant role in digital advertising. Microsoft spotlighted its independent prowess in artificial intelligence, with CEO Satya Nadella emphasizing the company's capacity for innovation, highlighted by the acquisition of talents from Inflection AI. Microsoft's recent announcements, including new AI-powered Surface devices, affirm its position as a technological vanguard. Synopsys encountered a bearish sentiment among big-money investors, despite its standing as a crucial enabler in the semiconductor design process. This sentiment contrasts with an optimistic perspective from industry analysts, which suggests a conflicting outlook on its immediate future. Lastly, Meta Platforms is under the investor's microscope for its impressive financial outlook, projecting significant earnings growth. At the same time, the company heads towards extravagant acquisitions by its CEO and navigates through legal challenges. Overall, the sentiment is one of cautious optimism, with technological innovation and strategic positioning fueling growth prospects despite the encroaching shadows of legal and regulatory challenges. Each company is navigating its path through these opportunities and obstacles, illustrating the dynamic and multifaceted nature of the market sentiment within the tech industry today. Given the current insights from the tech industry and the broader market landscape, several key factors suggest potential directions where the market might be heading in the week to come. 1. AI and tech innovations. The continued focus on AI by major players like Apple, Google, and Microsoft suggests a bullish outlook for companies at the forefront of technological innovation. The progress in AI initiatives and product launches could spur investor optimism, propelling tech stocks and potentially influencing the broader market trajectory positively. 2. Legal and regulatory challenges. However, the persistent legal and regulatory challenges faced by companies like Apple, Google, and Meta Platforms could introduce volatility. Upcoming developments in these legal battles might trigger cautious trading as investors assess the potential impacts on company valuations and market sentiment. 3. Investment trends. The mixed sentiment among investors towards companies like Synopsys, despite its crucial role in semiconductor design, indicates that market participants are weighing various factors. The week ahead could bring more clarity on investment trends, especially concerning companies enabling foundational technologies. Financial health and outlooks. Meta Platforms' positive financial outlook, indicative of substantial earnings growth, may boost confidence in the tech sector's earning potential. If other companies report similarly optimistic financial outlooks or forecasts, it could bolster market sentiment, encouraging investment in tech stocks. 5. Market dynamics and macro factors. External macroeconomic factors, including interest rate discussions, inflation reports, and geopolitical developments, will continue to play a critical role. Positive news on these fronts could alleviate some market tensions, while adverse developments might heighten caution among investors. Considering these factors, the market could be heading towards a week characterized by cautious optimism, with a keen eye on AI advancements and regulatory news. Innovation and financial health within the tech industry could serve as key drivers of positive sentiment, but legal challenges and broader economic indicators will likely shape the overall market dynamics. Investors and market watchers should prepare for a mix of optimism, driven by technological progress, and caution due to legal, regulatory, and macroeconomic uncertainties. The ability of the market to navigate these dynamics will be crucial for setting the tone for the week ahead. Today's market activity painted a vivid picture of an industry tightly balancing on the edge of innovation and regulatory scrutiny. Key tech companies like Apple, Google, Microsoft, Synopsys, and Meta Platforms are navigating through the challenges with an eye towards future growth, driven by advancements in AI and digital transformation. While optimism shines through due to technological strides and positive financial outlooks, caution remains a constant companion due to legal and regulatory hurdles. The market today reflects both the potential for significant growth in the tech industry and the complexities of operating within a rapidly evolving legal landscape. If you found today's market activity summary insightful, don't forget to hit that like button, subscribe to our channel, and share this video with others who'd appreciate a concise wrap-up of the day's events. I'll be back on Monday with another video to kickstart your week with the latest market insights. Until then, have a great weekend.